When investing, it's important to understand market cycles. In real estate, you have buyers and sellers markets. In stocks, you have bear and bull market. When talking about economics, we have recessions and expansion. And just like night follows day and spring follows winter, when investing, down markets are followed by up markets and vice versa. One always leads to the other. To be successful in investing, it's important to know which market we're in because there are techniques that may work in one market but not the other. I'm sure you heard the way to make money investing is to buy low and sell high, right? That's the number one rule of investing. But if you lack an understanding of market cycles, it's easy to do the opposite of this. And if you really think about it, it's kind of easy to see how someone can get this wrong. Just visualize for a moment. Imagine how much excitement is in the air when a stock or crypto is rallying. You hear everybody talking about somebody that they know that became a millionaire investing in some crypto meme coin. It's human nature to want to try your luck too. I mean, you can't have everybody get rich without you, right? This is the exact attitude that most people take when it comes to investing. Jim Rohn said, formal education will make you a living. Self-education will make you a fortune. In our formal education, most of us learn nothing about investing. So you have to educate yourself on it because investing is how you create a fortune. So a real quick lesson for you. One thing I want you to remember is this. When everyone is excited, the peak is usually not too far away. The people that bought earlier in the cycle are using the people that bought later in the cycle as what's known as exit liquidity. The savvy investors create a buzz so that they can unload their investments at elevated prices to the not so savvy investors. Now, it can be difficult to gauge the excitement level of the market though, because it can seem that the market has reached an extreme state of euphoria and it just keeps going up. There's a way to play this, but that's another topic for another video. But the point is this, the people that win in investing are the ones that buy when the masses are panicking and there's an overabundance of sellers. In real estate, this is known as the buyer's market. In stocks, it's known as the bear market. And recessions are when you position yourself to make a fortune during the expansion phase. Remember, you make your money when you buy. You realize your profits when you sell. And time in the market beats trying to time the market. I'll show you what I mean on the crypto charts, and I'll also show you figures on an Excel spreadsheet that I created. Just be ready because the things I'm going to show you will have you reevaluate your whole life and all of the decisions you made up until this point. Maybe not exactly, but you'll definitely have a better understanding of crypto and its cycles and how you may want to position yourself to profit from the largest wealth transfer the world has ever seen. We're going to look at 3 different coins: Cardano, Binance Coin, and Ethereum, and see what would have been the best thing to do to capitalize on a downturn. Let's take a look at the chart and see how this would have played out. Hold on, I almost forgot. Before we look at the 3 coins, I want to give you a little backstory about Bitcoin. Bitcoin comes into existence through a process called mining. There are these supercomputers known as miners all over the world, and they're competing to solve these complex algorithms. And the first miner to correctly solve the puzzle is rewarded in Bitcoin. Every 10 minutes, there's a new algorithm to solve, and the winning miner receives a reward of 6.25 Bitcoin. Every 4 years, this reward is cut in half. So in 2024, the rewards for solving these complex puzzles will be half of the current reward. So it'll be 3.125 Bitcoin rewarded every 10 minutes. This process is going to continue for the next 100 years until all the Bitcoins are mined. This slashing of rewards is known as the halvening. In the past, after each halvening, the price of Bitcoin and other crypto coins have been affected. I show you in the charts, and if you watch till the end, you may come to the same conclusion that I did, that the biggest wealth transfer that the world has ever seen is currently happening, and 95% of the planet has no idea. You ready? Let's go. Bitcoin's first halving event happened November 28th, 2012. The rewards that the miners received was cut from 50 Bitcoin to 25 Bitcoin, and the price was a little over $12. Let's look at what happened to the price after the halving. The following year, the price hit an all-time high of over $1,100. That's a 93x, meaning $1,000 invested on the date of the halving would be worth over $93,000. Let's look at the second Bitcoin halving that happened July 9th, 2016. The rewards were cut from 25 Bitcoin to 12.5 Bitcoin, and the price was approximately $650. Let's see how the price was affected after this halving. Again, the following year, the price hit another all-time high of approximately $20,000. $1,000 invested on the date of the halving would have grown to over $30,000 in 1 year. It's not bad, right? Now let's look at the most recent halving that took place on May 11, 2020. The rewards were cut from 12.5 to where we are today at 6.25, and the price was approximately 9,200. Again, let's see what happened to the price after the halving. This time, it peaked at nearly $70,000. So $1,000 invested on the date of the halving would have grown to nearly $8,000 in 1 year. Okay, so we can see that after Bitcoin halvings, Bitcoin went on to hit new all-time highs, right? Okay, just keep that in mind. All right, so now I want to show you some similarities between Ethereum, Binance Coin, and Cardano. Let's look at the Ethereum chart first. The price of Ethereum on the day of the second Bitcoin halving was approximately $11, and the following year, it peaked at over $1,400. If you would have invested $1,000 in Ethereum on the day of Bitcoin's halving, your $1,000 would have grown to over $127,000 in 1 year. I know if we could just go back in time, right? But I want you to notice something. Notice how Bitcoin peaked, and a couple weeks later, Ethereum peaked. Let's look at Binance. A couple weeks after Bitcoin peaked, BNB peaked, and it was the same thing with Cardano. Can you imagine how much euphoria and greed will be in the air as Ethereum was exploding from $7 all the way up to $1,400? People that invested $1,000 in Ethereum when it was $7 will be sitting on $200,000 1 year later. That's just crazy to think about, but that's crypto. Now let's look at Cardano. The week of October 2nd, 2017, Cardano was 1.8 cents. Every $1,000 invested would have turned into $72,000 just 3 months later. These are some crazy returns, right? But they're based on two different things happening that are very unlikely to happen. Investing heavily at the very bottom and selling at the extreme peak, which are both virtually impossible to do. Some of those people that made life-changing wealth, they just happened to be in the right place at the right time. It had nothing to do with skill. It was just more about luck. Can you just imagine how crazy of a time it would have been when everybody would have been throwing money at Ethereum, trying to get rich as the price was going up? This would have propelled the prices even higher. Till one day the tide turns, there's more sellers than buyers. The prices starts going back in the opposite direction. All that greed that was in the market now turns to fear. People will begin panic selling, trying to salvage whatever investment they had left. This will cause the price to drop even further, which will cause even more people to sell, which will cause the price to drop even further. The price will continue falling until all the non-savvy investors were out of the market. Then the savvy investors step in and buy the coin that the non-savvy investors sold at steep discounts, and the cycle starts all over again. Many of the people that sold violated the first rule of investing, which is buy low, sell high. These people would have bought high when there was euphoria in the market and sold low when the panic set in. But there's a way that someone that wasn't positioned to take advantage of the run-up to the peak could still have made life-changing gains. Check this out. Let's look at some similarities between Bitcoin and the three coins. Let's start with Bitcoin first. I want to show you something that each Bitcoin run-up had in common. Let's look at the first peak after the first halving. You'll notice that there was a run-up, then it drops down for an extended amount of time. Can you imagine everybody that was throwing money at Bitcoin when the euphoria was in the air and had no idea when they were investing in? But when the peak hit and the price started dropping, what do you think they more than likely did? Do you think they bought more or unloaded what they had? It probably sold, right? The week of January 12th, 2015, a couple years after the halving, Bitcoin dropped all the way down to $157. I mean, I know there's probably people out there like, "Ooh, thank God I sold and I got out when I did." That Bitcoin thing is dead. Man, I'm glad I got out. This white line represents how long it would have taken you to just break even if you would have bought at the peak. So it would take you over 3 years to break even. How many people you think would have been able to hold on for that long? I'm guessing not too many. Let's look at the second peak. If a person would have bought the top, it would have taken them until November of 2020 just to break even. That's almost 3 years. Not many people would have held on for that long either. So the conclusion is Bitcoin peaks, then goes down for an extended amount of time. So now let's look at the other three coins. Ethereum peaked and dropped down. Cardano peaked and dropped down. Binance dropped down after its peak, but that's only half the story. What I'm going to tell you is what I used to become a fairly decent investor. If you can internalize this and make it a part of you, you can become a fairly decent investor too. When investing, I personally do the opposite of what the masses are doing. So what do the masses do? They panic sell because they don't understand market psychology. They also throw money at things that they don't understand because others are doing it. So the things that a savvy investor does is educate themselves on what they're investing in, because the more educated you are, the less fear you have when the price drops. And once you understand market psychology, you'll understand that the run up to the peak was the bull market, and the reversal could be the beginning of a bear market or a bear trend. And investing in bear markets are how you position yourselves to make a fortune when a run up inevitably happens. Remember, bear markets follow bull markets and expansions follow recessions, and vice versa. So when everyone was selling, trying to salvage whatever they had left of their investment, let's say you took a different approach and instead of selling, you began buying. Let's say you began investing just $50 a week into one or all three of the coins, and you began doing this the week following the 2018 peaks. Let's see how this would have worked out for you. I'm telling you, it's about to be crazy. Watch this. Real quick, for Binance Coin, let's say you kept accumulating until the second break-even point over here. All right, so now let's look at Ethereum chart. I've already done the math for you. From Ethereum's peak to the break-even point, it was 157 weeks. So from here to here, it's 157 weeks. For Cardano, it's 167 weeks. And for Binance, it was shorter, but we're going to keep accumulating until the second break-even point, which was August 31st of 2020. That was a total of 137 weeks. What I did was I looked at each one of these candles. I'll talk more about candles in another video, but just know that the wide part of the candle is called the body, and the skinny part is called wicks, and they give you information about the price action. Each of these candles represent 1 week of price action. I gathered the price action for each week and entered these numbers into a spreadsheet and did some calculation. Here's the Ethereum spreadsheet. These are the average weekly prices of Ethereum from the peak to the break-even point. The average price per coin would have been $325. If you would have consistently just invested $50 a week for 157 weeks, you would have invested a total of $78.50 and own a total of 24.15 Ethereum, which would be worth almost $116,000. Your $8,000 investment would have grown to almost $16,000 in 1 year. Let's see what would have happened with Cardano. Over the course of 164 weeks, you would have invested $8,200. You would have more than 60,000 coins total, and the average purchase price per coin would have been 13.5 cents. If you would have stopped accumulating at the break-even point 6 months later, when Cardano reached the peak of 309, your $8,200 would have turned into $187,000. I know it seems almost unbelievable, but it's true. It would have been a similar story with Binance. Binance peaked at 686. So your $50 invested over the course of the previous 138 weeks would be a total of $6,900. A little less than 1 year later, it will have grown to over $280,000. These numbers don't even sound believable, do they? That's why I wanted you to see for yourself. This stuff really happens, and I've seen it happen in a much shorter time period. But that's more like being in the right place at the right time. And remember this. Time in the market beats trying to time the market. So as you can see, as we said earlier, you position yourself to make a fortune during the bear markets or when things are looking bearish. The people that made the most money consistently invested during the downtime or the bear market, which is represented by everything that's under the white line. All right, so let's recap. People typically sell and lose interest and write off crypto when they should be buying. So let me ask you a question. If you had to take a guess, would you say that we are currently in a bull market or a bear market? Not sure? Let me ask you another way. Do you hear anybody talking about crypto? Or does it seem to like it's died down? It's probably seeing like the buzz is going like it's died down, right? So that would indicate a bear market or at least a bear trend. And the last thing is the Bitcoin's halving had a positive effect on the price of Bitcoin and has led to a new all-time high the following year. And this has been consistent over the past 3 cycles. The price of the smaller coins we use as an example, Binance, Cardano, and Ethereum, all shot up to new all-time highs shortly after Bitcoin hit its new all-time high. Remember from the previous charts, we consistently accumulated from the peak all the way to the break-even point. And remember, we drew a line and accumulated until the break-even point, right? And remember the pattern. 2013, Bitcoin peaked, dropped down, the halving happened, Bitcoin broke even, and then went all the way up to a new all-time high. 2017, Bitcoin peaked, dropped down, hit a halving, broke even, shot up to a new all-time high. So you notice the pattern. In 2021, Bitcoin peaked, dropped down, and looking at the previous cycles, what should come next? The halving, then Bitcoin should break even, and then go on to new all-time highs, right? These things haven't happened yet, but what do you think the probability is that they will? I'm not a psychic, but I would guess there's a good chance it could happen. What do you think? So after Bitcoin hits a new all-time high, it drops down. Then there's a halving. Then Bitcoin goes on to new highs, right? At least that's the pattern for the last 3 cycles. Let me show you something. Let's look what the white line is for Ethereum. Look at where the price currently is for Binance. Look at where the price is currently in relation to the white line for Cardano. Notice how they're all under the white line right now. Remember what happened to the wealth of the people that accumulated under white line in the previous cycles? Just my observation. Now, if the pattern plays out like the previous cycles, what do you think will happen to the prices? Remember, Bitcoin hit a new all-time high. Then shortly after, the smaller coins hit a new all-time high. Remember those ridiculous returns that we saw earlier? I think those will look minuscule to what's coming. 95% of the world has never owned crypto. Those ridiculous returns that we saw, they came from less than 5% of the planet, and it's expected that around 20, 30, 50% of the planet will own crypto. If those insane returns came from just 5% of the population, can you imagine how crazy the numbers are going to look when 10 times more people and 10 times more money enters the market? The people that made the life-changing gains were the ones that accumulated during the bear market when everyone had lost interest. The things we talked about in this video, only around 5% of the planet knows. None of this is financial advice because no one has a crystal ball and can predict the future. I'm not a financial advisor. Past performance is no indication of future performance. I'm just sharing the conclusion that I've come to after dedicating nearly 8,000 hours over the course of the past 2 years, learning as much as I could about crypto. So I truly believe that these numbers that I'm talking about are possible because there are so few people in crypto right now. But when the masses rush in, the opportunity for life-changing gains and life-changing wealth will be gone. And there's nothing worse than looking back in time and realizing that you could have been the one that changed the trajectory of your family tree and created generational wealth, but let it slip through your fingers. I don't want that for you. I'm sure you don't want that for you. I believe this matter is so urgent that I created a course to help as many people as I can get started in crypto. So if you're serious about learning how to invest in crypto, you can apply for the beta course. If you're accepted, you'll work closely with me and learn the things that only 2 to 3% of the planet know. You'll also get the course at a discount. Plus, you'll get the newest updated course once it's completed. If you're not one of the 10 or 15 people selected for beta, don't worry, I'm going to keep dropping videos for you. But if you don't want to wait for the videos and you want to get started before the window of opportunity closes, I offer consulting services as well so that you can position yourself to get your share of the huge tsunami of money that is undoubtedly going to be flowing into crypto over the next few years. This once-in-a-lifetime opportunity is here for the taking right now, but this window is closing quickly. Thanks for watching, and remember, if you'll be willing to live a few years of your life how most people won't, you'll be able to live the rest of your life how most people can't. I appreciate you all, and I'll see you in the next video.